Hi and welcome to Top Tips Tuesday. This week's tip is for those property owners and investors really sitting on the fence and really not sure whether now's the right time to invest in real estate. I know we've heard a lot of articles and we read the news quite sensationalized on the market. Today, I just want to give you a bit of an overview on a very good article I recently read by Michael Matusik. Now, Matusik does property reports, been in the industry for many, many years in lots of property cycles, and I really respect his views and opinions, and it's all based on facts. So the article that you'll see on the screen there is the full article. It's quite detailed, runs through a lot of information, a lot of statistics. Today, I'd just like to summarize the bullet points and the most important facts that I got to take, out of the article. So again, not sure whether now's the right time to invest, sitting on the fence, what should we do? So Michael's opening statement was, negative property news will continue to hasten in 2023. Here's why you should just ignore it. So the first chart there is what's happened in the Australian property market since really the beginning of time or records began. As you can see from that chart on the screen there's been lots of instances that have really affected the property market. We've had world wars, we've had share market crashes, we've had the global recession, and despite all those, those life-changing and world-changing events, our property market still rebounded very fast after those events have finished. So that just shows that the long-term property investment is very sound and secure, but we just sometimes need to be a bit patient and looking at the bigger picture, and that chart really sort of demonstrates that. So a recent article by the Australian Bureau of Statistics showed that over the buyers that have come into the market in the last 3 years, currently sitting on about 34% equity in their properties, which is quite a high percentage. Also, the major banks have just finished their financial reporting, and their estimates of clients ahead of the home loans are about 10 to 25%. So again, another significant factor when you consider since pre-COVID, property values around Australia have increased by 42%. So what does negative equity mean? It means that we owe more on the property than the property is currently worth, and we hear of a lot of this again in the media. Michael Matusik is estimating, he thinks that only about 5% of Australian property owners have a loan worth more than the property's value. But just because they have negative equity doesn't mean that they're going to default on their mortgage repayments. So the latest data shows that about 74% of mortgage owners still pay less than 25% of their total income towards their mortgage, which is quite a reasonable or smaller percentage. And the real statistics are that Australians in 30-day or more mortgage stress are down 7% in the last quarter, and it's at the lowest levels since the Fitch ratings began in early 2002. So what that means is only a very small percentage are currently in mortgage stress. Now, for the first time in over 10 years, we've got very low unemployment. We've got a genuine skills shortage on workers, and we're expecting to see very, very strong population growth over the next few years in Australia. So I've got some information on that. So Australia's population is currently just over that 25 million as of March this year. So recently, the Australian government announced they have approved over the next 12 months in 2023, 195,000 visa applications from overseas migrants coming into Australia, which is a huge number. And there'll be a percentage of those that need to buy their own properties, and there'll be a higher percentage that will need to rent properties. So again, great news for those considering property investment. And our population growth is forecast to grow to 29 million by 2030. So remember, we're just under 26 million. So that's a total population growth of 3 million people over the next 8 years. And again, those people will need to own or rent real estate, which is a very positive factor for Australian property investors going forward. So that was just a bit of an overview of what's happening based on real numbers, real statistics in the current market, and why those smart property investors are really taking advantage of the market right now. I'm currently seeing less buyers in the market, sellers a bit more negotiable. So it's actually a great time before the market goes again. So hope that's really helped in your decision making. Have a great week. Thanks, and see you next week.